Everyone, and welcome back to my Morpho analysis videos on Wednesday 12th of October with me, Richard Perry, market analyst at Handtech Markets. We're going to look at cable now, and we've had a key bounce on cable. Is this going to be the start of a recovery? I don't necessarily think it will be. I think it's just going to be a bit of a bear market rally that gets sold into. Looking at this chart, I've now put on a stochastics projection of the big original Brexit sell-off, and then the rebound from 34, the rebound to 34.80 projected lower. 61.8% fib level of that basically was around about where we rallied from yesterday, and I think 23.70 could be an interesting level to watch out for. But the concern I have with this chart, 12.61, 100% fib projection. So yeah, that would be quite something. But anyway, so this little bounce, I think it's going to be a rally that gets sold into. Sort of zoom in here to get a bit more of an idea. So 23.30 has been a level that was holding yesterday, a couple of times tested, and again tested today before falling away. So it is a level of resistance that the market is looking out for. I don't think it's necessarily going to be a rally that really starts to pull higher. Now, I think you could argue that if you do break above 23.30, then that would complete a mini head and shoulders reversal, and you'd measure that from 20.86 to 23.30, which is like 250 ticks almost. So it could be another. It's quite a sizable rally, but I think there is quite a lot of overhead supply from Friday's later trading and Monday as well overhead. So initially you'd say sort of 24 big figure, or even you could argue 23.75, and then you'd start to think about the main resistance that comes in at 24.80 from this rally. So or the sort of the rally from the spike low. And that is a key level of resistance, I think, near term. But I don't think this is going to be a recovery that gets too much traction. I'd be very surprised if it gets additional sort of legs in it. It seems as though that this, if I zoom out, this red line, the 55-hour moving average. Sorry, the ways my charts work means it's quite annoying with that spike. 55-hour moving average is a basis of resistance. This red line. Again, we've sort of basically rallied to that, and it is forming resistance around there. So I think there is there is a potential for a rally. That's always going to be seen. But I think generally speaking, I doubt that sterling is going to get too much traction in a recovery before getting sold off again. But the concern would be the fact that it is a very volatile market still, and you could obviously see quite significant moves both ways. But certainly I think this rally will ultimately be sold into, and we're going to get a retest of these lows, 20.86. I don't think that's going to be the last time we see that level, for example. Certainly not having broken below 22 to 23. Initial support, you can argue, comes back in around 22.15 today, but I think ultimately this little rally will roll over and retest that low. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.